markets were mixed Monday as new US-China tariffs took effect, while investors digested better than expected Chinese manufacturing data. US tariffs went into effect Sunday on $112 billion of Chinese imports, while Beijing also began imposing retaliatory tariffs on some of the US goods on its $75 billion target list. At the same time, US President Donald Trump said Sunday that trade negotiations with China are still planned for September. The Shanghai Composite Index added 1.31% to around 2,824.11, lifted by defense and infrastructure stocks as well as unexpectedly positive fresh economic figures. Besides, China's State Council had announced more measures to support its economy on Sunday. Meanwhile, in Hong Kong, the Hang Seng Index slipped 0.64% amid another round of fresh protests that occurred over the weekend. The Nikkei 225 in Japan shed 0.41% to close at 20,620.19. In South Korea, the Kospi ended its trading day fractionally higher at 1,969.19. Australia's S&P ASX 200 slipped 0.38% to close at 6,579.40. On the data front, a private survey on China's manufacturing sector showed factory activity unexpectedly growing in August. The Haitian market PMI for August was at 50.4, better than expectations of 49.8. However, official data showed factory activity in China shrinking for the fourth month in a row in August. European stocks finished higher on Monday as manufacturing data in China and Europe showed some improvements. PMI data showed that Eurozone manufacturing activity contracted for a seventh month in August. However, the 40.0 figure represented a modest improvement from the 46.5 reading for the previous month. Meanwhile, UK manufacturing PMI plunged at its fastest rate in 7 years, falling to 47.4 from 48.0. In the UK, political developments remain in focus as lawmakers will bring forward legislation in the days to come, seeking to block the possibility of Britain leaving the European Union without a deal. The main opposition Labour Party will reveal its legislation plan today. Against this backdrop, the STOXX 600 climbed 0.3%, the DAX rose just 0.1% as German Chancellor Angela Merkel and her coalition partners lost support in regional elections. The FTSE MIB surged 0.8% as Italian Prime Minister Giuseppe Conte said he expected to complete a new government by Wednesday. U.S. stock markets are closed Monday in observance of Labor Day. Meanwhile, in currencies, the greenback was on the offensive against the majors, with the euro-US dollar plunging to fresh 2-year lows below 1.10, now threatening the 1.09 figure. The economic data played against the common currency as Germany's manufacturing sector remained in contraction in August. The PMI index was down 43.5, falling for a 7th consecutive month. Manufacturing activity in other EU countries was upwardly revised but remained below 50. For the whole Eurozone, the index came in as previously estimated at 47. Today, Mrs. Lagarde, the former IMF director and the future leader of the ECB, is scheduled to speak. Her comments, if come as dovish again, may put the additional pressure on the euro. By the way, during the early trading on Tuesday, the pair extended losses to fresh lows around 1.0930. In commodities, crude oil prices failed to regain the upside momentum at the start of a new trading week after a plunge on Friday. Brent barely held above the $58 figure and is still vulnerable amid a stronger dollar and the lingering uncertainty around the US-China trade year. Oil output from members of the Organization of the Petroleum Exporting Countries rose in August for the first month this year as high supply from Iraq and Nigeria outweighed the restraint by top exporter Saudi Arabia and losses caused by US sanctions on Iran. Meanwhile, in the United States, energy companies cut drilling rigs for a 9th month in a row to the lowest level since January of last year. That is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.